Good evening, everyone. We are formally now starting with the session. I'll request my resource person, Mr. Tanwir Alam, to enable the uh, audio and video.
Yes, ma'am.
So, a very beautiful evening to all the participants, my resource person, Mr. Tanwir Alam, and my team members. So, I'm sure that this session on personal finance is going to be an engaging and useful experience for all of you. First of all, I would like to extend my thankfulness to Mr. Tanwir Alam to kindly consent for this session and to enhance the understanding of our participants in the area of personal finance. So, thank you, Tanvir. And I would like to introduce Mr. Tanwir Alam. He is the founder and CEO of Fincart. Fincart is an organization which is engaged in helping numerous clients to manage their personal finance and with the under the able guidance of Mr. Tanvir. So they are managing the large amount of AUM of their clients and helping them to live a life free of financial worries and growing their wealth. So my participants, I would request and suggest my participants to take the full benefit of this session, ask questions, respond to the questions posed by Mr. Tanvir, and this session is going to be useful for everyone. Either you are an individual aspiring to meet your financial goals, or you are the one who are managing the wealth of your clients. So now I would not like to take much time, and I would like to hand over the mic to Mr. Tanvir to take this forward. Be ready for an enriching experience. Thank you, Tanvir, and over to you now.
Thank you so much, ma'am. Really appreciate. And thank you, IMT, for providing me this opportunity to share my experience on how you can efficiently manage the money. Uh, I'll share my slide so that at least it becomes a little easier for you to understand on what I'm going to talk about. Can you all see my screen? Give me a thumbs up. Okay.
Yes, you are. Yes, it is visible.
Great. So let me start with this quote. Money is a terrible master, but an excellent servant. And I'll share with more light on this. But I'm not going to give you completely a knowledge which is based on this comes out of a book. I'm going to share some real life experiences which has made me who am I today. Okay. Now, we all talk, people like us, when come to session, they talk about the good things and what they have achieved in life and the successes that they have seen. But this everything comes at a price. And let me share you some of my initial failures first, and that should be more exciting. When I started my career in 1995, and I joined at a salary of about 1600 rupees. And in that year, as like a lot of youngsters trying to make quick, easy money, and fortunately, I was working for a company which was into equity research and stock broking. While working for that company, which was into equity research and stock broking, I started trading in shares, making to make some quick buck. And I soon realized that I've lost a terrible amount of money. Having a salary of 1600, my loss was about 50,000 rupees. So it was a terrible experience. My second instance happened when actually in the gray market, before the IPO got listed, the share was getting traded, and that company was Turbo Cycles. And I had some good friend in the cycle market, so I had great insight on how the IPO could do well. I bought that share at a 30 rupees premium and actually sold it almost at about 80 or rupees premium to the market, hoping that I will make a great lakh rupees on 2000 shares that I have made. But to my utter disbelief and surprise and early shock, I could say that the person who was supposed to deliver share to me defaulted. And instead of making a lakh rupees, I ended up losing 2 lakh rupees there. And that was my foundation of learning about finance. So I delved deep into trying to understand what's the most certain way of making money. And trading was certainly not one of them. So with those experiences, actually, I helped to curate something which is helping me run the company in a more efficient manner. I went to the grassroots level and tried to get to the basic. And I've realized that keeping to the basic in a simple manner enables you to significantly create wealth. And it was not long. In the next 7 years, by 30, when I got married, I had my own house. And I'm talking about 2003, somewhere around. And that I house about almost at zero debt, 1 crore house. I got my car, I got married, and in fact, I got my sister married also. It all happened in the period of about 7 to 8 years. So that led me to the belief that if you follow some simple financial discipline and follow the basics of creating wealth, you're certainly going to make money. Now, what does this statement mean? Money is a terrible master, but an excellent servant. If, well, okay, money when allowed to control decision of your money, like desire, identity, this can become a tyrant. But when you take advantage or take charge of to use the money and use as a tool to achieve your meaningful goal, then it becomes a great enabler. That is why it's called a great servant. So let us understand more in detail what exactly would that be. Now, when I look at today, the biggest challenge is that a lot of people in the corporate world, when I face, are fairly stressed about financially. Now, there's a survey by a Sofitel company which tells that 86% of the employer are financially stressed, 60 worried about the cost of inflation, 67% feel that they will not have enough money to fund any major life goals, and with almost 50% fearing that they will not have sufficient money to live for the retirement. In fact, a very interesting study done by HSBC also says 7 out of 10 people most likely will have to depend on the children for retirement. Now, that's a very scary number. So, why do this financial stress come up? So, let me ask you a small question then. What are your financial stress? Can I get the chat a little bit? Okay. How can I get the chat? Yeah, okay, chat. I get chat. Okay. To the audience, what is your biggest financial worry? Can you give me some reason? Can you give me your worries on the chat? What are your biggest financial worries? Sorry. Paying loans, retirement funds, very good. What if I get fired from current job? Very good. Yes, great. Retirement fund, yes. Insufficient funds to buy house, desires, lack of funds during emergency, medical expenses, marriage fund, debt, loss of job. Fantastic, great. Thank you so much. Okay, now I'll take it forward. Now, this is where we are. Now, if you look at, the stat says there is only 1 out of 100 people will get rich by 45. And 5 out of 100 will get rich at 65. This is how the rich people have actually mastered the art. But why shouldn't the same be available to the larger audience who could actually take benefit of trying to create wealth and retire rich and perhaps at an early age. So let us dig deep into that. Now, this is a quadrant from the book Rich Dad Poor Dad. I've just borrowed this part from there. I really like this insight. Now, if you look at on the left side of the quadrant are employees and self-employed people, meaning people who have their own self-business, uh, who are running their own business, like even a kirana store or a shop, those kind of self-employed people, a chartered accountant, a lawyer, those are self-employed. On the right side of the quadrant, a big business owner, and you have investor. Now, it's beautifully explained here. The left side of the quadrant, that is E and S, account for 95% of the people, and they own only 5% of the wealth. While big business people and investor account for just 5% of the population, and they own 95% of the wealth. Now, it is not possible for everybody to migrate to the right side and become business owners and run big business. Mind you, small businesses are represented by S, which is self-employed, which is nothing but you have employed yourself to earn your livelihood. You're not employee. They are not big businessmen. Now, as I said, everyone will not be able to create big businesses. Meeting is not audible. Just a minute.
It is audible. It is audible. Our team will help the person.
Okay,
right?
great. So, if you actually look at, everyone cannot become big businessmen, but certainly you can transit yourself. You can move yourself from being an employee or a self-employed, but be a part of the right quadrant by being an investor. If you actually become the right investor, you can make yourself part of that 5% clan who would become rich. And that was depicted by the earlier slide also, that 5% will get rich by 65. That's exactly what I wanted to convey here. So this session is trying to help you out how, whether if you're an employee or a self-employed, how you can transition yourself to the right segment of becoming an investor. So this session is all about trying to transition you to become a seasoned investor. Okay. Now this is a very important slide. Money, what happens is a very, no, your relationship money will undergo a lot of change. Now, what do I mean by that? If you're in your 20s, you will realize that it's an era. It's an era where you are going to set your foundation of creating the right money habit. Now, this is the decade 20. So I'm just trying to help you, your relationship, understand the relationship with money. If you're in the 20s, that's a decade where habits matter more than hacks. If you actually create a good system. Now, what mistake I did? I was initially trying to chase returns. So this era is not about chasing return. It is about chasing and creating a system. So 20s will be a year of foundation where you can actually inculcate the habit of savings, automate your savings plan, and get the right set of risk protection done at this point of time. Risk protection would mean you're getting the right set of insurance. I'll come to this more in detail. The 30s, when you move to migrate to 30, your priorities will change. Most likely you'll get married, you'll have family, so your goals will change. From just being a single person, you'll have a multiple person. And Uh, and that is where it is all about trying to realize what are your priorities, what are your goals that it is. And now there also there's very, very important factor I would like to highlight. It is not only about your own individual decision. When you get married, it's about agreement. It's about agreement with your spouse, trying to understand what are your joint priorities, what are your joint goals. So that's how you transition to your 30s. When you will move to your 40s, you realize that there is a huge amount of career pressure. You will have your children who will be growing, they're needing more attention. You have aging parents, all this will come into play. So, in that kind of a scenario, how do you rebalance not only your funds, but your time, and, and what are your upskilling that you're doing to be relevant in the career? All this will take priorities. And 50 is about creating momentum and trying to create freedom for yourself. So this is how the relationship with money keeps changing at different phases of your life. Okay. And as I said, this is why it is called personal finance, because at which state you are there, or which age bracket, or which financial situation are you there, that will guide how you'll be dealing with your money. Okay. The next I'll talk about mindset. Now, this is very, very important out here to mindset. Money is nothing but a tool to achieve life goals. Having a feeling, belief in abundance, building money over a long term period, that is growing your money, and always ensuring that you have a good balance between instant gratification and delayed gratification. Okay. So, what is very important, if you actually keep money only for a short time, it may not grow. And money grows over a long time period. So, many a times you will come out with a choices. For example, while buying a car, should you buy on loan or should you save money and buy it upfront? There is a cost there. So, these questions will keep coming in your life. And always you'll realize that delaying gratification becomes more powerful unless there are certain more emotional attachment to it. Now, let me elaborate a bit here. We always suggest that you should buy your vehicle not on your, if you are an employee, not on loan, but by building your money, creating a car goal and funding it. That's the ideal scenario. But suppose if you have somebody, an aging parent, or somebody who needs car more often, you are a small child who's going around for various classes and all, and you cannot leave, and you're both working parents, you cannot leave them alone, then at that time, the emotional reason of that goal becomes more important than the financial reason. And by all means, that you can take a car loan there. So it's all about priorities at this time. So hence, the mindset should be the right mindset that you inculcate. Now, even I was reading about Warren Buffett. He talks about that I eat the same McDonald's breakfast and the same dairy ice cream. Now he's one of the richest person in the world. Yet he believes in simplicity. He has just a simple 4 bedroom house. So his mindset or his values about money is, he says, value over vanity, consistency over comparison. He does not get like to get compared to somebody has a jet or he's living in a pool villa and all. He's simple, he lives a simple life. It's a matter of choices. I'm not saying those things are wrong. It depends upon your own personal aspiration and what you wish to do. So he believes in long term investing versus impulsive investing. And this is the mindset that you need to create, that money is built over a period of time. Now, if you don't build this mindset, what happens? There's a very important research which is called the lottery paradox. Now, they studied a lot of people who won lotteries. And what was very surprising is that 70% of the lottery winners went broke within a few years of winning a lottery. So it's not having too much money. If you don't have the right mindset, you might create wealth, but you lose it again. So they treat it as a windfall money. and not as a responsibility. They went aboard emotional spending, and they had no financial discipline. So those people who earned a large amount of money also went broke down the line. So what is more important? Trying to understand your relationship with money, inculcating the habit of abundance, creating the right set of value system on how you should be able to will be managing your money, uh, aligning or spending a more in a way which basically will help you to create long-term wealth and not impulse spending. Now, when I meet a lot of youngsters, they get caught in the debt trap. They've gone ahead in the early jobs and went on a credit card spending spree. And the credit card company will force you, or possibly nudge you, rather, not say force you, nudge you to pay only 5% of the due. And that's the deadly trap. How many of you have got into a credit card trap? Can you give me a yes here? Right, yes. I was also one of them. I was one of them who actually got a in an early part of my life. Thank God my brother bailed me out. I said, I will pay you the money. Why should I pay? And you know, the interest payment on credit card is 3% per month plus finance charges and all. It is exorbitantly high at about 42%. And if you are already in that kind of a debt trap, please try to come out of it as soon as possible by taking help from your friend families who will not charge you interest, clearing that credit card debt. Worst situation, if you don't have anybody to help you out, please take a personal loan which is available at 16% and pay off your credit card debt. But do not get caught in this credit card debt. So this is again about mindset. Now let me talk about mapping. Now I can. So a simple thing which basically is what it's like what gets written gets done. Now there are a lot of science behind it, and I can talk about in this chapter itself can take you about an hour to talk, but I'll keep it as brief as possible. In our brain, there is what is called the reticular activating system. Okay, this is nothing but a brain's focus filter. It's like a bundle of nerves at the base of your brainstem. It acts like a gatekeeper for attention, deciding which sensory information will get through your conscious mind. So when you write down, it signals the RAS, reticular activating system, that this is important. And that is how your mind starts to perceive, and your mind starts to even spot opportunities to fulfill that particular goal. So that is why it is so powerful to actually start writing. And there's a lot of other science-based research which talks about vision board, visualizing, manifestation. You may have heard of a lot of things. So uh, this particular system, okay, if the voice is not clear, then I would possibly then look at putting a headphone. I'm getting a lot of prompt here. Should I use the headphone, Purushottam? Voice is clear?
Voice is
Thank you,
quite
sir.
clear.
Working.
Your
Oh,
voice
great.
is clear.
Thank you. Thank you. I was getting distracted with that. Anyway, so coming back to mapping, this is again alignment. If you actually visualize a goal, you will possibly allocate resources that will help you achieve your goal. Okay. And that is why it is so powerful to have a visual plan which shows you like a roadmap how you're going to achieve your life goal. And that is what mapping is. That is what aligning your life's hard-earned savings, directing it to the goal in the most appropriate manner. We will discuss this a bit more in detail when I talk about the financial plan and the template around it. Last is about managing money. And I will share some very interesting insight on management, which will talk about not only about managing money, but also managing your own behavior at a later part of the slide. Okay. So this 4M are nothing but a framework which will help you set a good foundation for building a good money management habit and ensuring that you achieve a lot of your life goals in a very planned manner. Now, again, I have a question for your audience. Why do we need financial planning? Please give me on a chat. Why do you need financial planning? To have social security, achieve goals. Yes, achieve goal, the myth, very good. What else? Financial security, stable life, mental peace, fulfill dreams, discipline, to become wealthy, get more time, growth, stability. Very good, great. Rich life, fantastic. Thank you so much for your responses. Yes. In a way, crystallizes your thought. Now, I repeat, writing crystallizes your thoughts leads to action, your action leads to result. कहते हैं ना, संकल्प से सिद्धि है. If you don't have sankalp, you will not be fulfilling your goals. Okay, so this is very, very important to have. Now, more important, mentally, there's a mental simulation. It also prepares your neural circuits for taking action. When you write down certain goals, it prepares your neural circuit to take action. Now, there is something called dopamine and the brain's reward system. They say setting goals basically and checking the plans releases dopamine. The brains feel good about it, and that's the feel good chemical. And this tracking of your goals literally acts as a reward to your brain and making it more likely to repeat that behavior. So you keep saving, keep investing on a regular basis, because when you see progress, you feel good. There's a dopamine release. Your mental. So not only with regard to money, let me put it on a different perspective. When I started running, initially it was very difficult to run even 200 meters. Gradually, when I started getting to 400, 1 kilometer, 3 kilometer, 5, 10, 20, so my brain started rewarding me, and it's actually started me to take more regular action, and I became consistent. And by being consistent in that, I could achieve a lot from being at a situation where I have my term insurance rejected at the age of 27. My term insurance, I repeat, was rejected at the age of 27. And at 53 today, I feel far more fitter and I run half marathon regularly. So the question is, this reward system of writing and practicing is a very powerful system which will help you to achieve exceptionally high goals, even with a limited amount of money that you have. And you'll be surprised to see that. Also like to state out here, now my father or even a lot of people attending in my age, our parents did not have any financial plan, but yet they provided a good quality education, they led a good life, and they were very happy, and their earnings were far lower than what the current generations are earning. Yet we are struggling because our aspiration level has changed. So in my time, having your air condition, having a car was a big luxury. Now it's become a part of a necessity. Okay. The mushrooming of malls and the avenue to spend money is become so high that you need to ensure that each and every naya paisa of yours gets fruitfully deployed to achieve a life goal. And that's the core reason why you should have a financial plan. Now let's understand what are the key elements that you should consider while drawing your own financial plan. So far, so good. Give me a thumbs up if you're okay with that. Are you with me? Or any question you have, you can put in the chat box. Yes? Great. Thanks, Raghav. Great. Fantastic. Great. Let me go forward. So I've set the agenda, why you should be having a money mindset. Why is it important to have a good abundance mindset, and what should be your relationship money, and why financial planning is important. Now let us go ahead and talk about what are the critical elements of financial planning. It's not about just blindly investing. Okay. This is a framework that we follow very clearly at our place. Okay. Now, if you actually look at, this is a process, and this is a trademark, a proprietary process that we follow at Fincart. And this talks about 5 elements. The first 2 elements will protect your hard-earned money. The next 2 will grow your wealth. And the third is when you seamlessly transfer your wealth to the loved ones. Okay? Great. Thank you so much, friends. Now, so first part is emergency planning and risk planning. What is emergency fund? In fact, in the chat, when I asked about people, why do you need financial plan? A lot of them mentioned emergency fund, and very rightly so. And people of this generation will know more because we got affected by COVID just about 5 years back. Okay. And there was a chaos. I had a situation where one of my friends running a very good business also, because it was a physical business, he was cash strapped and he had to borrow money. He came to me. So the question is, I realized that a lot of people don't have emergency fund. Now, emergency fund, not necessarily, I repeat, not necessarily are only for bad reasons. It is only also for good reason. Emergency planning or emergency fund is that particular fund that will stop you from breaking your long-term investment. Okay. For example, there's a marriage in the family. Okay. If it's a marriage in the family, it's a good reason. And you need to spend some money, but you don't want to spend it from your long-term investment. So you can withdraw from your emergency fund and refill it again. So it could be a good reason, bad reason. It's a small sum of money set aside idly for 6 months. And if you are in a very high risk job where you could lose job and finding job would be difficult, you can always go for 12 months, but ideal is 6 months of your monthly income. That's or monthly expense in a way, sorry, monthly expense you can have, right? That's the emergency fund. So risk planning. Now, life is like going on a adventure sport. Suppose you're going on a water rafting. When you go on a water rafting, you have to compulsory wear a helmet and a life jacket. So in your journey of finance or your journey, personal financial journey that you have, we all aspire a lot, and see what happened in Ahmedabad. I mean, may their soul rest in peace. It was a very sad incident. Lot of things rest. Suppose, God forbid, and we have a lot of example, people like Yuvraj Singh got down with cancer, Lisa Ray, they are all healthy, sports personality. We have seen what happened to people who lost life post-COVID very easily. And while working out, they're all healthy people. So you need to have a good health insurance and a good term insurance. These are a must insurance which everybody should have. And if you are in a job which is a bit risky, you should have, or a lot of traveling job, you should also have an accidental policy with a temporary and permanent disability. I repeat, accidental insurance policy with a permanent or temporary disability. God forbid, you are not able to work for 6 months, 12 months, the insurance company will fund your expenses and monthly cash flow, because in today's time, a lot of corporate world will not give you a leeway to give you a long leave for 1 2 years without pay. They will give you leave, but they will give you without pay. They'll not give you pay. So in that tenure, you'll get funded by this insurance company. So I repeat, your term insurance, health insurance are more important. So this will ensure that whenever you plan, your money that you have hard built does not get drained because of one or two bad incidents. Now, let me give you some real life example. We were managing a money for a family, a joint family, and those people did not have uh, uh, an insurance plan for the parents. His father was very, very critically down to a point that they had to resort to some big major surgery, and that major surgery was costing in lakhs. The, the sons decided they'd either sell the house and move to a rented accommodation to actually fund the father's illness. But unfortunately, he did not survive before the flat could get sell. So that is the kind of dent that ignoring these two risk planning can have into your plan. Now that is very, very fatal. Term insurance covers accident part, but that is not full-fledged accidental cover. You will see a lot of clauses which is not very powerful. So I suggest that you have an accidental insurance. It doesn't cost much money, but it is far more powerful. Now, coming back to goal planning. So I've already spent a time on how visualizing or your mindset when you plan your goal helps you to achieve better. Now, I will only touch upon retirement planning a bit more. Why I have kept retirement separately? The most important reason is retirement in many cases is a far off goal. And when dealing with a far off goal, most often it gets procrastinated. And this is behavior. So you tend to fulfill your short term needs or immediate goals, and you forget something which is more important and very certain to happen, you ignore. And two, you may be requiring a large sum of money. Now, medical science has improved a lot. People lifespan is increasing. Now, if I ask you out here, people who are employed or having salary, how many months can you survive? Can you give me an answer? How many months can you survive if the company does not pay you monthly salary? Please, I would love to know that. Zero. Okay. More people? Zero. 1 year, 5 to 6 months, 1 year, 10 months, 1 year. Great. Most people are 2 to 3 few months to 1 year. Maximum is 1 year, right? Imagine that you have to spend 20 to 25 years of your life without any active earning. And if it blows out at the last moment, that is why a lot of people have to depend on their children for retirement. And trust me, it's not a great feeling. You do not want to depend on anybody. How many of you do want to depend on your children for retirement? Please give a yes. No, right? Nobody wants to depend. So I think planning for retirement is more important. Now, there is a reason why people don't plan long-term goals very easily. And I'll give you a good example. It was in Bombay, in local train, they had a lot of accidents. So when people start surveying, they asked the train driver, why are people committing suicide? He said, they're committing suicide. How? Well, when they come in front of the train, when I'm honking, they're not moving. And they die. So while crossing the railway track. So people went deep, and they saw that people who actually died on the railway tracks, some of them were carrying vegetables, some of them were carrying liquor also, hard drink. So the people, psychologists start thinking, if they have to commit suicide, why won't they drink alcohol and suicide? Why are carrying there in the back? Now, that is where people from behavioral finance, behavioral side, psychologists, neuroscientists came in forward. So they found out that these people, while crossing railway track, they cannot judge the speed of the train at which they're coming. And while they're crossing, they realize the train has come too quickly to them, and their brain freezes and they become motionless, and they're not able to move despite the driver honking. And in no time, the train rams them and they die. And this exactly is the behavior when it comes to long-term planning. So I would urge strongly that you should do your own retirement planning very, very soon. Okay. How much retirement fund should we invest? Someone who is 30, it's actually a function of various things. Very soon, we will be launching a pure do-it-yourself financial plan. Maybe in the third quarter, September onwards, we'll launch the financial plan. Stay in touch. I will share how you can actually do your financial planning or create your retirement fund. And if you still want, you can leave your number. We'll ask somebody to do your retirement planning. It's based on your current expenses, what your life expenses would be, how much money you would need in retirement. It's a calculation that is done, and we arrive at a corpus that you need to have for retirement. Okay. Yeah, I think Ravi's put up a health check out here. You can do that health check calculator. It will help you. So I think this sums up the entire planning part. Now, why is estate planning more important? Can anybody tell me out here, why is estate planning more important? Estate planning could be like a will, writing a will. Okay. Why do you need to write a will at a young age? Okay. See, seamless transfer of property after death. Fantastic. Yes. The reason is very simple. Most people today time are living in nuclear families. And best situation then you have, if I'm investing, my spouse is a nominee, and that's how it happened. But we go on holiday together. God forbid something happens. Yes, for investment, ma'am. God forbid something happens. If you have a will or a well-defined nomination plan, this will help you to seamlessly transfer your money to your loved ones in the manner you want. You may want, okay, if it's a male member, is it first it should go to my wife and then to my kid in this proportion? In the manner you want your wealth to be distributed, the estate planning helps you to do it. Very, very simple. And you're right, ma'am, it's for future security. Now, this doesn't cost anything. It can cost you as low as $3,000 to $5,000. But it's the amount of peace of mind that it gives to you is phenomenal. Now, in my own personal life, I have seen people. We have seen one crash. I think few days back. In the year 2000, a similar Indian Airlines, that was Alliance that time, flight crashed in Patna. And I lost one of my young colleague with two kids. The son 5-year-old and the daughter was 2-year-old. And the money that he was getting from term insurance, he had bought a house, was not very sufficient. And yes, Indian Airlines and the company ICICI, he was on official duty, was paid them some insurance money. But I could see the trouble we had transferring his money to his right legal heir. It was a nightmare. I know things have improved from 2000 until 25 years. It has improved a lot. But that time it was a nightmare. Now, as per Hindu Succession Act, if you do not have a children, and again, a very incident happened. One of my client, she doesn't have kids. Both husband wife working, they bought a property together, and they had loan on it. And the husband had an untimely death, and she was just 50, 55. He passed away. And now, as per Hindu Succession Act, the wife had to go to each sibling and the spouse's parents to take no objection certificate. Imagine the pain. She's saying it's my hard-earned money, my husband hard-earned money, and I have to go and take a no objection certificate for getting my own property. Now that's for the nightmare. So all those things can be avoided by just being aware of what could be done much beforehand. Life is uncertain. We need to plan that in a much organized manner. So this helps you to give you a good view on how you should be planning your goals. Now, goal could be your children education, their marriage, buying a house, buying a car, or going on a vacation. All these things are goal. Some may be recurring in nature. Some may be once in a lifetime, like children education, marriage, and all. Right? Now, but if you realize goal will be short term, long term, medium term, you need to bucket that goals very clearly. Now, so how do we align investments? So once you've decided your goals, these are my goals, and I've ensured that you have ring fenced yourself. आपने अपना सुरक्षा चक्र, सुरक्षा कवच पहन लिया है in terms of term insurance, in terms of having a health insurance. If you have done those basics right, and you started for investing for your goals, how should you allocate your money? So before that, let me explain a little bit on the asset allocation and some secret sorts of wealth creation that will help you to understand it. Okay. There are four kinds of assets: equity, cash, fixed income, that is debt, and alternates like gold. It could be real estate, it could be silver, anything, or it could be in any lot of people start investing in unlisted equity. Okay. So these are various asset class. Now each asset class has a different role to play. Equity gold will be for a long-term wealth creation. Cash and cash equivalent will be for, say, a short-term goals, and debt could be for ensuring that you get income regularly. And it also adds asset allocation. So before that, let me explain to you a couple of things which is very important before you start allocating your money. Now this is a very powerful formula which we have studied as kids. Power of compounding. If you invest money for a longer period of time. Now, let me ask you a different question. 5 raised to the power 10. I repeat, 5 raised to the power 10 means 5 into 5 into 5 10 times, or 10 raised to the power 5. 10, 10, 10, 10. 10 into 10 and 10. 5 times. Which number is more? Can you give me an answer? Which number is more? 5 raised to the power 10 or 10 raised to the power 5? 5 raised to the power 10. 5 goods. Absolutely. You're right. It is the N. It is the power. That is, N is more important than the return. But what is the most common mistake we do? मुझे कितना return मिलेगा? What is the return I'll get? Without realizing that N is creating power, it has more power. Most often people come to me कि इसमें क्या return मिलेगा? Like it's Maruti ad, ये कितना देगी? Those kind of things. So your wealth creation secret lies in compounding. It's not in timing the market, it's timing the market. Okay. And the longer the time horizon, this will work like magic. Now, if you actually look at some of the mutual fund, the NAV today is crossed even 1,000 times. When it is started at 10, what does it mean? It means that that money is become 100 times. Okay. So that's the power of compounding. But let me tell you one more thing also. The power of compounding efficiently and effectively does not work for time horizon less than 5 years. So what should you do? If your time horizon is less than 5 years, you should be focused on preserving capital and not chasing return. Okay. And I'll come more to that. Now, if you actually look at that, this is like a quilt. Okay. Its data is from 2005, right? March. It's calendar year return. If you actually look at each each asset class, how to read that? The top one on the left, equity 17% says that has been the top asset class performing. It delivered 17% return. Hybrid portfolio, which is a mix of debt and equity, gave you 11%. CPI, inflation was 4%. Gold gave 1%. Debt gave 0% in that year. So if you notice, even the best performing asset equity changed after 3 years. In 2008, gold, and 2009, gold was giving the maximum return. Again, in 2010, equity delivered highest return. So the asset classes keep changing their position depending upon the market scenario. Hence, having a complete thali of all this asset allocation product ensures that you have a much balanced portfolio. And one of the cardinal rule of investing is not only creating wealth, is also ensuring that you do not lose your money. And this asset allocation ensures that you do not lose your hard-earned money. Now, if you look at even market cap wise, the large cap, mid cap, small cap, all those cap also changes position. So have within the equity asset class also, having a good flexi cap kind of a portfolio ensures that you do not lose money or create wealth when the market turns up positive. So this is the virtue of asset allocation. So I said first, power of compounding, second, asset allocation. Now, if you are doing goal-based investing, there's a very simple rule I've kept. Now, it is a simple visualization. If you have to go travel long, suppose you want to go from here to London, most likely you will fly. You want to go from here to say Delhi to say Patna or Lucknow, you might take a train or plane. For a short run from here to Gurgaon, you'll take a car. And for a very short distance, you can take a bike. Okay. But if you use airplane for a very short distance, it will not happen, right? So that is why for funding your short-term goals, these are the products that you should have. Very short-term goals, savings account or your liquid funds. These are two appropriate products for funding very short-term goal, which will arise in time less than 1 year. Okay, clear? For goal which is 1 to 3 years, you can have fixed deposit or a short-term bond fund. So it ensures that you reach your destination safely without running out of fuel or with any accident. For a medium-term goals, you have post office schemes, hybrid funds, new age ULIPs that you have. And for long-term goals, you will have you'll have equity funds, hybrid funds, which will help you to fund your long-term goals. So these are very simple goals that you have, and this is how you should be achieving them. So far, so good. Give me a thumbs up, please, if you understood this. So I repeat, when you have a goal, you'll have a short-term goals, long-term goals, and medium-term goals. So you allocate or choose the fund which is most appropriate to fund that goal. Now, let me elaborate a bit more. Suppose you have chosen a goal which is your child is 10 years and he or she will need money when they turn 18. The goal is 8 years and it's 2025. If you move 5 years down the line, in 2030, the residual time period is 3 years. I repeat, your child is 10 years, you have planned to fund the goal in 2033, 8 years down the line. After 5 years, in 2030, the residual goal is 3 years. So you need to change from equity to a short-term fund to ensure, or a hybrid fund to ensure that you do not face disappointment when the goal arises. See, let's face it. If it's your children education, it has a defined timeline. And if you need that money at that time, you must have it. And if you do not have it, then that's not the right investment for you. So you need to review and rebalance your portfolio at a regular interval to ensure that you remain track on fulfilling your goals. Sorry. Now, I know we are running short of time, but I'll take not much time. There's a few interesting part. Now, I often get questions out here when people say, can we trade? Can we invest in a product which obviously people like our age do not subscribe to, but I'm not completely against. A lot of Gen Z invest, like cryptocurrency and all. What we have realized that it is not the people, one is consistent investment, being regular. It's a very, very important habit that creates wealth. Again, what another habit that destroys wealth is panicking, not even to manage behavior. So in the COVID, one of my client who, in fact, why I feel bad, because he was the first client we onboarded at Fincart in 2013. And his brother was working with a finance as an investment banker. And apparently he told, get out lock, stock, barrel, the world is going to be in a trouble. And he exited exactly when the market was closer to 26,000 Sensex. And today the market is trading at 81,000 levels. So not only he missed an opportunity, but he lost a significant amount of wealth in that way. So I'll do simple 3 exercise just to convey my point. Many a time people come with a view that this asset allocation is right, okay? Or this product is right, or this fixed deposit is right. So I'm just going to share my thoughts. Now, in this screen, you are reading some word. Can you just go through that word in your mind? And I will ask you to answer one simple question, which is in the next slide. I want you to write it in the chat. Okay? Are you okay with that? Good to go? Great. So now, which of the word that is going to come, please tell which word is not there in the next screen. Petrol, right? Now, so this is how your perception gets formed, huh? If you go back in that previous slide, the word sleep is also not there. But everything concerning sleep is there. So your mind has perceived that sleep is there. Petrol is the only one, right? So the question is, sleep is also not there. So right now, so we form perception. A lot of investment happens based on perception, ad hoc manner, friends, families telling you this is investment is right, this is investment right. Follow a very structured approach to investing. This will create your wealth. It is your hard-earned money. Please do not leave it to chance. No ad hoc investment. Plan in a very directed manner that you're going to invest. Okay, over to next question. Okay. Now this will you have to answer in 5 seconds only. Chocolate and bubble gum cost 110. Chocolate is 100 rupees more than bubble gum. How much do they cost individually? Your time starts now. 5, 4, 3, 2, 1. Fantastic. 100. Okay. So the question is, it's 5 and 105. Most people say 10, 110. So the 10 and 100, the difference is not 100. It's 90. So now there is two part of the brain that we have, the reflective part of the brain and the reflexive part of the brain. That is why trading is very, very difficult. When you are trading in the market and market goes through a volatile movement up and down, we tend to act emotionally. That is your reflexive part of the brain. Why? Brain is 2% of your body weight, consume 20% oxygen to run. It is lazy by nature. When it will first use the emotional solution, emotional reply. When the market goes to you, act emotionally and you'll give me 110 and 10. But when you say, okay, this is wrong, your mind will go back and calculate, it'll come back with 105 and 5. That's the reflective part of your brain. So that is why people investing find that creating wealth is far more sure shot and more reliable way of creating wealth than trying to trade the market and outsmart the market. And I repeat, I'm not the smartest one, and that is why we do not advocate trying to time the market. Again, one more exercise. What is the common number in all those 3-digit number? There are 10. There are sets of 3-digit number. 4. Yes, right. Beautiful. What is common across this? Okay. So first one, it is very easy to spot. The number was 4 because it was a pattern. Okay. The next one, no, 3 is not the number. In the third and fourth, there is no 3. Oh, there's a missing number 6. Human brain can only visualize, see what it is seen in the past. When it cannot see the future, it tend to miss the opportunity. And that is why a lot of people misses opportunity by relying too much on the past. Okay, past it is good, but it is future that will help you create wealth. So being open to the idea of new ways of doing business, new ways of managing money is also a great way of creating wealth. Okay. So this sums me to the end of the session. I would, ma'am, like to open the session for a question answer, and I'll stop my share screening.
Yes, definitely. So now it is the time, lot of learning for the participant, and now it is the time they should ask the questions. I'll request Manish to coordinate for the questions, my team member. And one question I can recall, somebody asked that debt means liquid, liquid means debt fund. So I think you should clarify on that. One participant asked in the middle. So whether liquid and debt is same. So definitely they are not, but I think you are the right one to answer that.
Yeah, liquid fund is a very short-term debt fund, which is as an alternative to your savings bank account. It can be withdrawn uh, on a one-day notice period, and it is suitable for even a weekly investing, 1, 2, 3 days, 4 days, 5 days. We invest a company money for that. Thank you so much. Really, I'm very happy you liked it. Thank you, ma'am. Thank you, Kalpan, ma'am.
And every one of you, please do not be miser and fill the feedback form, because that is the key to get the more sessions from Mr. Tanvir and my other resourceful speakers. So,
Yeah, it also helps us to improve.
yes, yes. So any questions you have? Somebody is asking liquid fund will come in short-term gain.
How much percent to invest in all planning pyramid? Though there is no percentage, Vineet, you have to first ensure that you cover your risk, and if you don't have even a great amount of money, don't wait for perfection. There is no perfect moment. Get started. Plan with one goal, one investment. It is up to your convenience. Okay. And you'll be surprised, there are today tools available. Suppose if you want to plan a very big goal also, and you have limited resource, what we call is step up SIP. you can keep increasing your SIP every year with a percentage, and you can still achieve a big audacious goal with small amount of money. Can we have a sample financial plan for a person? Yes, of course. Why not? You can forget about that. You can write to us. You can get a free financial plan for yourself. We don't charge for a financial plan. What percentage of a total fund should be kept in secure funds? Satish, this is based on your risk profile. If you're very conservative, you're afraid of investing, and then you'll have a higher portion of your in debt fund. If you are aggressive, you're willing to take chances, and you are young, you can put more money in equity. Is gilt fund direct growth is a liquid or a no? No. Gilt fund could be a very risky fund. Okay, let me give you a perspective. Gilt fund is very volatile because it has up and down. Now, when recently when RBI cut 50 basis point for 0.5% and gave 100% 100 CRR, the gilt fund, some of the gilt fund have an overnight loss of 0.8%. So gilt fund is not liquid fund. Liquid fund is a separate fund. Gilt fund is a debt fund. It's a volatile debt fund which is for a period of 3 to 4 years. Ma'am, I think they don't
Somebody
have
asked the question, is liquid fund a good investment option for short term considering its tax implications?
So if you're on a high tax bracket, then other than liquid fund, you can try arbitrage fund. Arbitrage fund is like a liquid fund, but it will be more tax efficient. The only difference is liquid fund can be invested for a period of 1, 2, 3, 4, even 7 days. Arbitrage fund I will recommend for a period of 3 months and above. If you have a window of 3 months and above, invest in arbitrage fund. It will become tax efficient because the short-term capital gains will long-term capital gains will be at about 12.5% compared to a liquid fund, which will get added to your total income and will get taxed at your income slab.
So thank you for that answer. Gaurav Mehlawat has asked, what percentage of real estate should be in our portfolio?
So real estate is a very tricky thing. I would keep real estate out of my financial assets. I'll give you the reason why. Whenever you do asset allocation, and if you include real estate, that will be the biggest pie, and that will skew your asset allocation. So I would suggest that you keep real estate separately and you create asset allocation based on your financial assets.
Next question is from Ardhar. How beneficial is the bonds for investments?
Bonds is good for short-term goals where you do not want to take equity market risk. Bonds is good to create a balance to your equity risk. It puts a cushion. It's kind of a balancing your equity risk. Okay. So it's a part of your asset allocation. You must have it because when the equity market goes through up and down, it acts like a cushion. It ensures that you do not lose sleep when the market is going through bad times.
Yeah, and there is a thumb rule also that the debt should be equal to your age. So I think that could be a
Yes,
simple
man. A
rule.
lot of people use it, but I am a little old school. I don't use that because that's thumb rule can depend on different people's perspective, risk profile also.
Yes. The next one is, which bonds will you suggest? So this is to particular a question, Ardhar. Which bond will you suggest as per current market scenario? So for the bonds, still, if you wish to answer, Tanvir.
Okay, there's a question by Pranav which says overnight fund or arbitrage fund. Arbitrage fund is suitable for period of 3 months and above. Overnight fund or a liquid fund is suitable for even 1 to 3 months period. Okay. Which bond will you suggest as per current market situation? As per the current market situation, I would recommend a dynamic bond fund kind of a portfolio, which will, or a, say ICICI all season bond fund, those kind of fund I will suggest, which will help you to get advantage of the declining interest rate environment which is going to come, because globally also growth is slow, and on a global slowing market, it is expected that the interest rate will get cut over a period of time. If that were to happen, you will see India following that as well, and with if the interest rate falls, your bond fund will deliver high return. How gold is investing? Gold should be a part of your asset allocation. It's like a pickle in your thali. You should have it. Okay. And especially more so now. Earlier, we used to think gold is the only investment for against hedge against inflation. But now what has happened post Russia Ukraine war, when Russia's US sanctioned Russia, and they realized that holding forex reserve only in dollar could be a big problem. So a lot of the central banks across the world started buying gold, and you'll see that gold reserve has gone significantly up, and that's precisely the reason why gold has moved up very rapidly over the last few years. And if you actually look at the forex reserve in dollar was the number one, the euro was number two. But now a recent study says that gold has beaten euro reserve, and it's the second biggest reserve after dollar. Best way to invest in gold now for long term is SGV. Yes, sovereign gold bond is a good way to invest. ETF and SGB are two different things. ETFs are absolutely index linked. It's an exchange traded gold fund where you get the market price up and down. SGB gives you that plus gives you additional interest. That's the only difference. Real estate have risen home. However, the demands have decreased. What percent is good to invest in? See, real estate, if you're investing in commercial assets and all in India is good. In India, real estate in the residential segment is not very, very good. The rental yield is 2.5% only, between 2 or 2.5%. Yes, if it appreciates very rapidly, then the rental yield will start looking good to you. But if you want to have, if you're investing for rental yield, then go for commercial or retail thing where the ticket size is also smaller, and you can actually participate in real estate. The other alternative now for retail people is you can have a REIT under AI if you have a larger portfolio, but that's minimum 1 crore. Now the SEBI has approved what is called FOP, fractional ownership of properties. Now that regulation has come, sooner or later the product will start coming. That would be a better way of investing in real estate with a small amount of money. You don't have to block a big chunk, and that would be a more efficient way. So wait out for more products to come out.
So I think we should call it a day because the questions are unending, and definitely for all the participants, you can share the questions with us and we'll be separately responding to that. Will that be okay with you?
Okay, ma'am. Thank you so much. And Ali, one thing I would like to say, at Fincart, we really have a strong core purpose of helping people achieve their life goals. If you feel that you need help, don't shy away. See, you will come to us. We will help you create a financial plan and ensure that each and every naya paisa gets to your right use to help you achieve your life goals. You can visit our website. I'm putting it out here. It's called fincart.com, and you can seek all your help. We have a team of more than 100 advisors, wealth managers today now, helping people, more than 10,000 families across India and internationally, managing the money. And we are doing for the last 13 years. Thank you, ma'am, for providing this opportunity, and I really appreciate this opportunity.
So now I, Dr. Preeti Sharma, Area Chair Finance at IMT CDL. First of all, I appreciate all my participants for very active listening and active responses throughout the session. That keeps us motivated. And I thank you, Mr. Tanwir Alam, for taking out the time and enriching the understanding of our learners. And I assure you as Area Chair Finance that in the future, we are going to hold many more sessions, which will continue in the series of personal finance. So thank you once again. Goodbye. Have a nice time.
Thank you, ma'am. Thank you so much.